and we have a complete 360-degree view of the entire healthcare sector. Big picture, specifics, more about companies. If there is a regulatory action, how will life change? The big picture is that for every 10,000 patients or people, the global numbers are strikingly different than what India currently has, which means that the need for healthcare and the need for quality healthcare, I think, will grow exponentially. We've seen the sector now commanding P multiples which are as high as that of consumer sector. But it's a sector where regulatory intervention in the past has been, I won't use the word traumatic, but I would say evident. Viren Shetty, Executive Vice Chairman of Narayana Healthcare joins us now. Viren, good morning. Thank you for joining us. So what should we start with? The big picture, specifics on if there is a regulatory intervention, or specifics of where NH is moving?
Sure.
What should we start with?
It's always an exciting time in our business. The Supreme Court suggestion on capping rates is an impractical suggestion, but the anger is real. The opacity in the pricing structure is real. The impression that a lot of people have that healthcare is expensive is real. Some of these can be addressed, some of these simply cannot. If you look at healthcare costs going up in this country, that is simply a factor of more and more treatments being available. The reason why people are finding it unaffordable is that you can't expect people to pay out of pocket for a lot of things in healthcare. So there are solutions that the industry is willing to propose, but without getting into draconian things like price fixing for everything.
Okay. In the past also, regulatory intervention has happened, and that has affected Narayana Health's profitability by quite a bit. And I distinctly remember this happened pre-COVID when there was a cap when it comes to the cardiac or the heart healthcare. If there is a regulatory intervention, do you think, okay, it will be difficult to implement, but this in a sense will also have implications in terms of the price cap?
Sure. See, the question is, what is the price cap meant to achieve? If you fix on the output side and you don't address anything on the input side, the cost remaining the same, the price to the customer will just flow to another dimension. So what is the larger goal? Is the larger goal to make healthcare more affordable? Then price cap does not achieve it. Because what happens right now in a dynamic pricing situation, you have multiple price points for multiple classes of people. You have very poor people below poverty line who are getting treatment at Ayushman rates. You have government employees who are getting treated at CGHS rates. You have people who are paying out of pocket, getting treated general ward, semi-private, private, deluxe, super deluxe, all those rates. You fix one flat rate, what will happen? If you're a farmer, you will end up paying more. If you're a rich fellow, you're paying less. So then the poor person is subsidizing the rich person. And that's not practical either.
Okay. Let's now change gears and talk about the big picture. And the big picture for the healthcare sector is that growth has been exponential, expansion has been exponential, healthcare is now, or health insurance is now the mainstay. But given that we have seen such a massive expansion, especially in tier 2 cities outside metro, do you think we could be suddenly staring at a situation of more demand, more supply and less demand?
I mean, that's been the case. No, more supply, less demand will not exist, because still the demand for healthcare is effectively infinite. As many as doctors and nurses and hospitals that are there in this country, it is still a very small fraction. And then a lot of times you get into trouble when you consider all beds as the same. You said 15 beds per 10,000, but not all beds are the same. If you look at organized, accredited hospitals that comply with standard accepted norms and say that you have NABH classification, those don't even account for 10% of the total beds in any city. Most of them are unorganized and in the nursing home. So it's not all the same. So oversupply, if you look at the large numbers, it may seem you're adequately supplied, but that's not really the case. We still have a huge way to go. There still needs to be an incredible number, not just beds, but medical equipment and doctors and nurses in places where you can get treated, even in the largest cities. Forget about tier 2 and tier 3 towns. So there's a long runway of growth and demand. But for affordability, no longer you can expect people to pay out of pocket. So just like no one's paying for an apartment out of pocket, no one is paying for their car out of pocket, they're taking loans and EMIs. For healthcare, you need insurance. And insurance also has to grow as the healthcare sector grows.
But the sector now, Hiren, some would say, is getting brutally competitive. And B, with the advent of PE players now, and with the advent of the fact that you got most of the hospital stocks which have gone public or have ambitions to go public, suddenly one is getting a sense that there is a strong focus on profitability, cut the corners, kick in terms of efficiency. Could that come at the cost of compromise in terms of healthcare?
So those are two different things. Brutal competition enforces price correction, right? The thing about a drive for profitability invariably happens when there is a constraint on the number of competition you're allowed. So any regulation that makes it harder for people to make money in an industry will strengthen the hand of the incumbents. People who are already there, anyway, they have the buildings, so they will continue doing as they do, and they'll be very happy to see that no new people are entering the sector. You want the price to go down, you want it to be more consumer friendly, you allow as many people that want to open up hospitals to come in. Profit is a natural function of how much is there available for you at the exact point at which you make it too high, then it's more attractive for more people to come in. If it becomes too less, then no one else comes in. Right? That's how a modern market economy is supposed to function. So when you say that, oh, hospitals are charging a lot, oh, the profit is very high, hospitals are charging a lot because it costs a lot to deliver. The profit is high, but that only exists in the balance sheet. The return on capital in our industry is very low. The payback period for every single hospital bed that you put in, the cost of land, cost of equipment, cost of all the doctors is extremely high. So you're taking money, but you're making less money than what you did if you just left it in the bank. So these things also need to be put into consideration.
Then we also bring on board Yatharth Tyagi, Director with Yatharth Group of Hospitals. Yatharth, good morning. Thank you for joining us. While we've already discussed with Hiren on his views on how, if regulatory intervention is there, how that will affect the healthcare sector. Let's get your initial thoughts on that. If implemented, if there is a regulatory intervention, how could this change dynamics for Yatharth Group of Hospitals?
I think in general, regulating price rates in private sector is not the most practical situation, not the most practical solution to making a healthcare much more affordable. As far as we are concerned, I think our pricing is already quite less compared to other listed players. We are, having almost pricing of less 20 to 25% cheaper than the likes of other listed players. So for us, similarly on the RPOP side, so for us, it wouldn't make that much of a significant difference, but at the same point of time, regulating pricing and reducing rates and implementing CGS rates, it's not the answer to make private healthcare more affordable. If government really wants to make it much more affordable, there are many ways to do it. But reducing the pricing, that would just lead to hospitals then also compromising on certain aspects. The doctor payout, the doctor's salary, which is quite linked to the volumes that they generate, will also be reduced at the same amount of time. The pricing of lab reagents tests, the diagnostic that comes into play will also we have to reduce then, as well as pricing is also regulated largely by private insurance. So it's not just hospital sector which involves, it's a 360-degree approach where private insurances, pharma companies, diagnostic lab companies, and hospitals will be taken into the account. So that's why it's probably not the most practical solution, but let's see how the government goes about this.
Hiren, this is the following sense which we get from when we speak to folks who are involved with policy making. That look at the EBITDA margins of hospitals. From Apollo Hospital to Fortis to Max Healthcare to NH, margins have exploded and they're making more money. That needs to be checked. Is that true?
But how much money is a sector allowed to make? Is 20% EBITDA margin or 40%? We don't even know what is clear. And it's not that the money is going anywhere. All the money that the healthcare sector makes goes into building more hospitals, goes into acquiring more doctors, into adding more medical equipment. You want a healthy, sustainable, vibrant business that attracts much more inbound investment from all the top private equity investors across the world. You want a healthy IPO market, so all doctors will say, yes, I don't just want to work for someone. I want to go and build my own institution and provide competition for the existing players. all that money gets reinvested. It goes right back into the country. It gets paid out in taxes. It goes out in salary to the doctors and nurses. So it's not just about the monies. It just doesn't disappear into a black hole in this industry. It gets reinvested completely into building more beds and addressing the needs of our country. So you want a strong and healthy balance sheet for all the healthcare players. And the minute too much money comes in, that's when everyone says, okay, now let's go and build and add extra because I believe I can do it for less. So as with Yatharth and with NH, and see, the thing is that not every healthcare group is entirely concerned with absolute value extraction. I would argue very few of them are. Most of them are looking for growth. They're looking for volumes. They're looking for treating more patients, for looking at the mass market opportunity that exists in this country. See, the perception will always be there with a few people who end up with very complex surgery and end up paying a lot of money, and they feel that this isn't something that they were well prepared for. It can be addressed. Hospitals can do a lot more towards giving estimates upfront and to counsel the patient and say that, see, this is something, it is very complex, this procedure you're about to get. This is how much it's going to cost. So with enough education, people then feel that, fine, it is my choice that I want to get treated and pay this amount of money for that or not. If not, there are other hospital groups you can go to.
Thanks, Viren. Good to be speaking with you, but just wanted to shift the focus back, Yatharth. The other thing that we want to discuss is, of course, the trend which is happening in the sector regarding M&A as well. Do you think that is something that will really continue, the consolidation, the buyouts? Is that the way to grow going forward as well?
M&As is always a good strategy, but it has to be also supported with the organic growth. So both organic and inorganic expansion is the right way forward. If there's just only M&As happening, then the need for the new supply in the market, for the new beds, it doesn't really get solved. But yes, at the same point of time, certain hospitals, if they are merged, a better value is created in terms of, quality outcomes, quality infrastructure. Then I think M&A is a good strategy. That's something, Yatharth Hospitals have also recently done. We have, acquired 2 hospitals, one in Madhya Pradesh and one in Haryana over the course of last 2 years. But that's really, in line with the synergies that can be created in, making those older hospitals into much more advanced, so let's say certain hospitals which were not compliant to NABH standards, GSA standards. If, mergers happen in those scenarios, then the much more quality healthcare can be provided. So yes, mergers and M&As is definitely a good strategy, but it has to be well balanced with the new creation of beds that should be out there in the supply to meet.
I just want to go back to the entire Supreme Court issue and wanted to understand whether there are any preliminary discussions that you may already have had with insurance companies at all.
See, I think everybody is, waiting to see how it, pans out in the couple of months ahead. Supreme Court has definitely come out with a statement, but in practical situation, what happens is to be seen. Center, if you look at for that matter, has actually supported both the private insurance and private hospitals over the last few years, especially this government. Recently CGHS rates were hiked after a long time. I would say after 5 to 6 years, CGHS rates were hiked so that it can be reached to a much more scalable lens. So I think the government is all support for the private as well as the government sector of the hospital. So I think everyone in the industry is just waiting to watch how it already pans out.
There are a couple of models which are there in the private healthcare segment. One, doctor-owned hospitals like Narayana Health or shall be, or for that matter, these are 2 models which I can think of. Then you have hospital chains like Apollo, which are large and which are expanding all India. Then you have region-focused hospital healthcare. For example, Fortis is largely north-based. You are also a region-focused healthcare company, the company which you represent. Where do you think the expansion is going to be bigger, and where do you think there is more, there is more scope for growth?
I think both the type of models as well as the large hospital chains and regional players. If you look at over the last few years, India as a whole has done well. The private healthcare industry has done tremendously well, whether it be pre-COVID, whether it be post-COVID, in terms of meeting the demand for the diseases as well as bringing in new technologies. I think these both models have expanded quite well. Earlier, if we talk about 6-7 years back, private hospitals were looked as a very heavy cost model where a lot of investment would have to be done upfront and the return was quite late. But I think now regional smaller players, including the likes of, whether it be KIMS, whether it be us, Jupiter as well. I think regional players are able to also grow. This is the trend that we have seen over the course of last 3 to 4 years. I think both the models are doing fine, and I think this is the way it should be also going forward. We are getting into the debate of the pricing reduction, or that is something the center is considering after the Supreme Court verdict. But if you look at overall, I think the private hospital industry is going in the correct direction. There are a lot of new advances that we are bringing. We are bringing robotic surgeries in India. A similar robotic surgery on Da Vinci cost much less in India compared to other places in the world with the same infra. So I think the industry is moving in the right direction, and I think the speculation about the pricing should very soon be gone out, and I think we'll be back on the track again.
Okay, Yatharth, stay with us. Lots more to talk about with you, but let me also welcome on board Dr. Nitish Shetty, the CEO at Aster DM Healthcare, joining in on the show right now. Dr. Shetty, good to have you on ET Now today. Now, I know the Supreme Court commentary on the implementation of SGHS doesn't really imply to you, but just wanted to get your take as an industry player. Do you think, while for the consumer it may be a step in the right direction, but what about the industry?
Thank you for having me on the show. Very good morning to all your viewers. Yeah, see, we being a very responsible healthcare player, we do understand where the government is coming from, why the Supreme Court has come up with this directive. Some kind of regulation is expected. We were anticipating in terms of pricing, but as long as the regulation is within the limit where right now what you see in the private healthcare space is an inflection point. You see a huge penetration of the organized player into the tier 2, tier 3 cities. For example, Aster Group, 70% of our beds are in the tier 2, tier 3 cities. We have only 30% of our beds in metro. This momentum should not be lost. 1A. At the same time, if the price regulation is going to help the patient, Indian patients, or any foreign patients who access our healthcare for making it affordable, and then also access the quaternary and tertiary care facilities in India, what we stand out for in the global market, it's a right move to have. But at the same time, we need to be mindful of how much are we going to regulate the private healthcare players.
Nitish, that point is taken, but you say that most part of your business is in tier 2, tier 3 cities, and is that something where the focus area will continue to be? You will continue to expand there, and also if you can talk to us about the kind of volume uptick, occupancy uptick you're seeing within those segments?
Yeah, see, like I said, 70% of our beds are in the tier 2, tier 3 cities. Especially in Kerala market, you can see most of our hospitals are in tier 2, tier 1 cities. Their occupancy is reaching up to 70 to 80% now. The volume is there, and also in terms of the kind of work we do there in the tier 1, tier 2 cities, it's at par with what Metro is doing. So, for example, our flagship hospital in MedCity, called MedCity at Kochi, the clinical work being done there is at par with any hospitals in any metro. So in terms of quality of care we are doing is very high. At the same time, the occupancy level is also very high. And also the efficiency parameters are also kind of coming into the tier 2, tier 3 hospitals, where our margin expansion is also happening. So what we are demonstrating with the Aster model is that a large format model of a large quaternary care model is viable and practical in a tier 2, tier 3 city also.
Nitish, could you give us a sense of post this entire adoption of healthcare or health insurance, how has life changed for Aster DM? How many of your patients currently have health insurance? Do you think that number is increasing? What is the average size of health cover which your patients have? Could you throw some more light on that specifically?
Nikunj, the healthcare, the private insurance penetration is different in the metro and different in the tier 2, tier 3 city. But we see the penetration increasing even in the metro. As we all know, it is increasing in the metro, where it's up to 60 to 70% now. More 60 to 70% of the patients are on the private insurance in the metro city. In a tier 1 city like Kochi, it is almost reaching up to 40%, 40 to 50%. So the growth rate is also at similar in the metro in the tier 1 city. But in the tier 2, tier 3 city, the penetration is not to that extent. In certain geography where we are present, we have up to 80% cash patients. But even there, we see lately, post-COVID, there is an awareness among the patients to go for the insurance, some kind of an insurance. Even a 20-year-old, 18-year-old kid is opting for a private health insurance. People realize the importance of health insurance now. The awareness is very high, and eventually we have benefited greatly with the increase in the penetration of the insurance because Aster primarily is known for quaternary and tertiary care work. So when the insurance penetration increases, people opting for this high-end work also increases. So in that way, insurance has helped us in improving a case mix and also the volumes.
Okay. Yatharth, final question from you. The healthcare sector, the hospital sector, has two issues. One, the entire profit sharing model with the doctors, and B, constant need to upgrade, which is that every 2-3 years a new technology comes in. There is a lot of capex which is required to perhaps keep on upgrading it. Do you see that being a constant challenge and which will cap the return ratios for the hospital sector? Now that intensity is more competitive, every hospital chain would like to have perhaps the best in terms of equipment and the best in terms of healthcare services, but that comes at a price.
It does come at a price, but at the same amount of time, that is something hospitals don't look to ever compromise on. And that is something, whether if you look at the latest advance in technology over the course of last 3 to 4 years, getting them and providing them to the patients, that's the utmost priority for every hospital. Yes, doing that in an affordable way and making the margins meet and making the capital, deployed have good returns. That is something I think hospitals are evolving in that model where, earlier it was much more difficult to do. But if you look now, I think there are different ways and means where hospitals are able to make margins, but at the same point of time, not compromise on the quality. So if you look at, in our case also, Yatharth Hospitals over the last 2 years, we have got 3 robots. We have got, new LINAC machines, including, high-end PET scan machines. But that is something, that is the must, that is the need of the hour to provide the best treatment for the patients. In terms of matching the cost to do it, yes, it always has been a challenge for the hospitals. But, now there are different ways that hospitals are looking to, to regulate the doctor payout model as well as making it less on incentivized model, but more on a fixed and minimum guarantee model for the payout of the doctors. So then these are a few ways that hospitals are able to take up this challenge quite well. And I think having the best and latest technology at the cost, it's a no-brainer for hospitals to go forward with that.
Let me also encourage Aditya Khemka to jump in and perhaps throw more light on where hospital stocks are headed. Now, before the sell-off, the hospital stocks had started commanding P multiples of consumer companies. The last 2 years have been an extraordinary move for some of the healthcare stroke hospital stocks. Aditya, first, where are these stocks headed, given that they are now commanding P multiples of consumer companies?
Yeah, so first of all, thanks for having me. So on the hospital stocks, our view is that most of them have become overpriced, given what has transpired in the last 2-3 years. Hospital businesses generally trade globally, if you see, or regionally, if you see, between 20 and 30 times EV/EBITDA. But now we are seeing valuations in India which are 35, 40 times, 45 times EV/EBITDA also. So that's clearly some sort of a froth and some sort of a overvaluation that has been built up into the subsegment. Further, if you see how the larger hospitals are trading versus smaller and mid-cap hospitals, it seems that liquidity is chasing the asset. So the larger the asset, the more expensive the stock. So it clearly seems like a case of a lot of money chasing very small amount of assets. And the more liquid the asset, the higher valuation is getting, which we don't think is a fundamental attribute of investing. And hence, over a period of time, will autocorrect.
Aditya, Having said that, in last couple of quarters, we've also seen supply, and supply largely from new IPOs. And typically when new IPOs they come in, they also tend to have an impact on the demand-supply equation. How would you map that? And if this bull run continues, maybe more and more hospitals, which are unheard of, they can suddenly go public.
No, that's true. But look, most of the IPOs that have come in the last 2, 3 years have been very, very small IPOs in the hospital segments, right? I mean, in terms of the quantum of the fundraise that they've done, it's been extremely small. And just think of the amount of money that is flowing into mutual funds. I mean, compared to that, these IPOs have not been able to make any significant impact. So they're not being able to absorb the excess liquidity or the excess, should I say, willingness of mutual funds to invest in hospitals. That amount of money is still going into the large cap hospitals, and therefore those hospital stocks have become far too unreasonable in terms of their pricing and valuations. So therefore, I don't think supply of stock is a concern here. I mean, market is clearly right to supply even more, to absorb even more supply if there were. But larger hospital stocks are not diluting, so there is not enough supply to absorb and to absorb the demand, and therefore the larger assets, the more liquid assets, keep getting more exorbitantly priced, and I think that trend will continue.
There are, I mean, if I just, let's say, make a split right in the middle, one side are pan-India hospital chains of Fortis, to some extent Apollo, even Narayana Healthcare, Medanta, they're expanding. But the other side of the split are doctor-run hospitals. And right at the top is Medanta, Shalby, or for that matter, NH. Which is a better model to associate with for an investor?
So I don't classify hospitals as who's running them. So for instance, Healthcare Global, there is a doctor that runs it, but the majority stake is owned by the private equity player, right? So it is very difficult to make a general comment on whether a doctor and hospital is more efficient or a professional management run hospital is more efficient. You have to look at certain metrics. You have to look at cash flows. You have to look at ability to grow. You have to look at the quality of the growth, the balance sheet, and most importantly, the headroom for ARPOB, right? So ARPOB in hospitals are similar to ARPO in telecom. So if you're already doing 70,000, 80,000 rupees ARPOB a day, how many patients in India can pay you more than that? And remember this 80,000 ARPOB that is being reported, or 70,000 ARPOB that is being reported by some of these hospitals. This is an average number, which means some patients must be paying more than 1 lakh a day, and some patients are paying, let's say, 50, 60,000 a day. Therefore, the average is 70, 80,000. So I guess as investors, we need to understand that there are two elements to profitable growth. One is volume growth, the other is pricing growth. Volume growth in healthcare sector is more or less a given. India is an emerging country. Demography is very, very supportive of healthcare as a segment. But the pricing growth is where the devil in the details lie, because India is a poor country, we at large. So, we can't really afford to pay very high prices. And therefore, hospitals which are already charging 75, 80,000 rupees, 70,000 rupee ARPOBs, the investor needs to ask himself the question as to, can this ARPOB or can the price really go further north of this? Yes, there is an element of case mix, but how much can you optimize case mix? Beyond a point, case mix will give up. And it has to be price increases, which will reflect in your ARPOB growth. So, just think of India as a very flat pyramid, right? So very few patients at the top can pay 70, 80,000, 1 lakh rupees a day. And then, the larger bulk of the patients can just pay 20, 30, 40,000 rupees a day, even with insurance. So, that's where I think people need to focus on.
Okay, so Aditya, if for those who are watching the show, if they want your advice on which are the hospital stocks to buy, what is your house advice? Buy, sell, or hold?
So look, we are an asset management company. We are not really in the business of giving advice, but I can tell you what I own in my portfolio. So in our healthcare PMS, InCred Healthcare PMS portfolio, we own only one hospital stock, and that's Healthcare Global.
And as of now, and how many hospital stocks did you own about a year ago, just to get a sense that whether you book profits or not?
So historically, we have owned 3 of them. We have owned Healthcare Global, Aster DM, and Max Healthcare. Okay. But as these stocks were rallying, Aster and Max, we thought that at the right valuations, it was the time to exit. And Healthcare Global is something we still hold because we still find valuations okay. But the other two have exited at valuations where we thought there was enough growth being discounted in these stocks.
I really appreciate time. So let me just summarize for our viewers that we've spent last 30 minutes in discussing the entire hospital stroke the healthcare sector thread and pair. What is the most important takeaway, which everybody wants to know? The regulatory action. Now you heard from three hospitals that it's a regulation which is easy to flag off but very difficult to implement, and if it is implemented it is not going to be having a very strong detrimental impact on the profitability of the hospitals. B, the need for quality healthcare will come at a price, and that is something which the regulator should be cognizant of. B, in terms of the big picture scenario, the big picture scenario is very simple. There is more demand and there is less supply. C, the most important one for our viewers, hospital stocks have seen a great run up. These are businesses which will require constant capex, constant upgrades in terms of facilities and in terms of the requirement for healthcare equipment, and the entire profit sharing model which is there with doctors is not going to be having a very large uptick on the margins. So it's safe to assume that the wave of huge margin surge, I guess, in the healthcare sector is behind us, and these stocks are trading at P multiples which are now nearing consumer companies which are growing without capital requirement, but the hospital sector requires a lot of capital. So if you're looking at investing in some of the hospital stocks, you should be a bit wary at the current juncture. If you get a downturn largely because of any regulatory action, that is the time you should be buying it. And then depending on your comfort, whether you like companies which are all India chain-based chain-based hospitals like, let's say, a Fortis or a Apollo, or you like doctor-based models which are small but are growing in big cities, that's a judgment call. But there are a lot of models which currently are there when it comes to the entire healthcare sector.